That's good.
Yeah, just three bad words. Hi, my name is Chaster Johnson. This is Investing for the Rest of Us. I am the co-founder of the Stockbossup app and of Stockteamup.com, and I'm here today with Ryan Henry, the founder of Open in Indiana. Ryan, thanks for joining me on this interview.
Well, Chester, thank you for having me. It's a pleasure to be here.
So in the last few weeks, I've been interviewing a lot of different people in the financial world, just great people that are very knowledgeable on finance. But today, Ryan, because he works with small businesses, he's going to ask me some questions about funding and my experiences, with the hope that people that have small businesses or have questions about it, about raising money or all that, we can answer them. I don't know all of it, so there's going to be a few edits randomly, and those are me saying I don't know what Ryan's talking about, but I'll try my best. And thank you, Ryan, for bringing these questions to me.
Well, Chester, hopefully we don't throw you too many curves today. So, well, Chester, the first thing I want to ask you on behalf of small business owners everywhere, because since we're in an economy right now where we have a lot of people transitioning out of a job they've held for years and now they're going into consulting, one of the most common questions that we get from a new entrepreneur starting their business is, how do I get banks to take me seriously? And it's something that we've never really been able to kind of hash out.
Man, that's a tough one. I'll just go through my experience because banks don't take me seriously too. Let's just be real here. They really just want to see revenue. They they want they're going to give you some money, right, as a loan, and they have an expectation of some kind of return, and they're going to say, okay, if you can make this much a year, you can do this much in payments. So you can make this much, and are you making that consistently? That's pretty much it. They'll freely give you credit cards. I'm going to guess probably with normal credit, you could probably get credit up to $25,000. So there's no real reason why you couldn't start getting some loans. There's also other resources like Lending Club, Lending Tree, that you may be able to have a lower bar to go over to get financing from a bank. But basically, if you want to be taken seriously by a bank, you should have consistent revenue, and then they'll take you seriously. And they'll probably want 2 years of it, and it needs to be audited.
And so, Chester, what about the people who are just getting started? And you had mentioned that there's private groups that you can work through. You want to share a little bit about some of the different funds that are available out there that take an interest in small businesses?
Yeah. In terms of private capital, and I got to be honest, the best way is possibly someone that's in your inner circle, that you have trust with. Frankly, that's how I started with it, was just people that trusted me from experiences. There's when you get kind of bigger, probably after the fact that you have consistent revenue, it depends on the business, but let's say you have consistent revenue, you want to grow to that next level. You want another factory, or you want another machine or whatever in your production line, or some more features in your app. There's private equity groups, and they're going to be like the banks. They're going to look, but they're a little different though. They still want you to have a presentation. They'll want to have a business plan and what does the investor get out of this? That's what you should be thinking when you make that plan. But they're going to look at opportunity more than just consistency. The bank doesn't really care about how much opportunity you have. They just care about being paid back. And that's the difference between private equity and a bank, which is the private equity will look at the opportunity as a whole, because that can grow their returns higher, and it will never grow a bank's returns. So there's angel investors, that's one, and you can easily look up angel investors in your local area. You'll always find a group. In terms of groups, that's kind of like the main one. And as we go along, maybe I'll talk more about the hurdles of just getting investments from anybody. That's it's a bigger question.
So Chester, let's kind of change the subject up from the money side to you've established a partnership with somebody. What would you say to a small business owner who is looking at the prospect of someone investing in their business, but then they want an active role in the day-to-day operations?
Uh, you know, man, that's a tough one. It's really personalities, and that's really like, leadership and you know, measuring the ability of someone to work with you. It's from my experience as just a leader in a company, I've realized that you can have someone that's great and amazing at what they do, but they may not be the right person for what is happening, what this current job or situation is. So I think you need to look at the person that is going to be taking an active role and thinking, okay, is this the right person for what I'm doing? Do I want a banker for my farming my farming business? Maybe that is the wrong way to look at it, but that might be the perfect way to look at it. I mean, consistent crop yield and all that. Random example. The other thing is, when you think about a person coming in, one thing that I really like is really breaking up responsibilities and having different parts of 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 the pie in terms of responsibility. I found in business, this is more of like a corporate thing I found, that when you have too many people that have intersecting responsibilities, you have people that conflict with each other, and then they start to hurt the business. But if you set high goals for everybody and they all own their little piece of that goal, you can focus on their capabilities and how much they're performing and their measurements directly, instead of making it murky with someone else in there responsible for it too. So I think if you can have two people that can have different responsibilities, then I think it'll be good. So like, an easy example is someone that's focused on operations and then someone that's focused on sales. You can really break those two apart, and operations needs to own getting the product to that person, and the salespeople need to own getting the person to buy the product. And having those different responsibilities will be helpful. If you have a sales/operations person and another sales/operation person, and that's murky of who's doing what, you're probably going to fail. It's too hard to have mixed tasks and make a business succeed.
So then let's switch gears a little bit here from the running a business side to kind of keeping your own financial house in order as an individual. What is some of the advice that you have for someone who is self-employed as far as building up a retirement?
Oh man, definitely. You can start off. You can do a man. I used to be an investment advisor. Now I'm forgetting my terms. I think it's a Roth IRA, an individual Roth IRA. You can start those for yourself. You don't need a company to do a 401k and all these other special, tax sheltered accounts. And you should do that immediately. There's no reason to ever not do that. The tax savings on it is great. You're essentially just not getting taxed on your earnings, and you get to use that to make more earnings next year. That's what it comes down to, and that amplifies your money substantially. So that's an easy one to do. Once the company's healthy, pay yourself. When financials are healthy, pay yourself. But that also comes into, before you can get to that point, your business plan needs to really acknowledge yourself. If it doesn't acknowledge yourself, then you're going to forget something pretty critical to the reality of making that plan happen.
And so what advice do you have for someone today who's on the fence? They're ready to walk away from a corporate job, or for whatever reason that corporate job's no longer an option. What advice do you have for anyone who's thinking about entrepreneurship?
I think the easy answer is just do it. That's the easy answer. uh, just doing it opens up doors that you don't even know are there yet. When you're in that kind of situation where you're going headfirst into an objective and a goal that you're passionate about, you'll find things on the way that you wouldn't have found by playing it safe. The alternative to that, though, is, you know, having, throwing a random number out there, a quarter million to start to live on makes things a lot easier. Just that's a nice ballpark number, that, for an average person, that can give you a lot of runway so that you can focus on the business and not on, paycheck to paycheck. So those are the two sides of it. And you have to personally think about yourself of what you think is right for you. Um, that's it. What is it right? Which way is right for you? Do you want protection and savings, or do you want get the experience from the journey itself and open up new doors for yourself?
So then let's kind of talk about individual investing, since I know that's your specialty with Stockteamup. Um, what would you say to a business holding stock in a company of which, let's say, for example, Microsoft? What's your opinion on a business owning stock in Microsoft, knowing that every computer in their office is a Windows system? What do you think about those things?
As a business, unless you're Berkshire Hathaway, uh, I would say you want to, focus the business. You don't want to have stocks in your business. You want to have, individual stocks in your portfolio. But in terms of owning stocks, I think that once your company is one of your stocks, and you really should diversify your portfolio. And if all of your money is in this one stock, which is your personal business, once that is sustained and doing well, there's no reason not to diversify into other companies. Microsoft's a perfect example of one that you could do. Yeah, I mean, I think of, once you have a business that's running, it's really just one of your stocks, and you should diversify from it. There's no reason not to once it's healthy.
And so then, looking back at the actual business that's performing well, what are some things that a small business can do to diversify their own range of products or services, kind of protect themselves?
That's interesting. And this is something I've learned the hard way, and that's to talk to your customers and talk to the people in the market. And there's ways you can make money that you may not have realized, and you should take advantage of those. You know, we make money on advertising. That's always been our initial model, but people are interested in our services in other ways that we've learned over time. And we've come to realize that our system could be white labeled. We can white label the service. We've been requested to white label it, which means that they just take the software. We've made software for them, and we just let them have it, and then they give us a fee for it. There's nothing wrong with you doing that. We've realized that instead of doing advertising, we can also do with like Google or Yahoo, we can do direct advertising. There's a market for that. There's a market for investment advisors to want to have access to people that are interested from our platform to them. So there's a lot of, I would always keep your mind open to revenue opportunities for the business that you're making, because it might be the one that you're not looking at that will make you all the money. I think the better example, instead of my own business, is Amazon. Amazon makes a lot of money off of web servers, and everyone thinks of them as they make money on selling products, but they really make a ton of money on web services. All these websites are built off of AWS, Amazon Web Services. It's a huge industry. It would be, I'd have to double check, but it might even be by itself a Fortune 500 company. It's so huge. They have a huge, unprecedented market share for a company that sells, competes with Walmart. It's really, they pivoted sometime into the 2000s, and they just kept going, and it's been great. They had all this software because they had to build it up, and they took advantage of it.
So it's if you find something that might add value to other businesses, to explore the possibility of turning around and also offering that product or service that you've been able to make, learn, or otherwise execute.
Yeah, yeah. Being able to change strategies and be able to go into a new market is very important as an entrepreneur.
So let's talk about the concept of competition and how it's perceived versus what it really is. How do you think of two businesses that provide at the first appearance the same product or service?
Oh, I think it's, you know, a natural part of of business. It's very healthy. You have to make decisions. Are you going to battle them, or are you going to try to work with them, or are you going to lose to them? You know, that's a decision. That's a decision that you will make by not acting. So uh, it's a healthy part of it, though. You know, it's healthier to battle in the market than to battle in the streets. That's for sure. So having another business that's competing with you, if it makes sense, join them. Try to partner with them. If you don't think that they can beat you, then be cutthroat. Take them out. I think that's a very reasonable thing to do as a business owner, and you have to think like that. It's just strategy.
So then let's talk about you personally. What are some of the lessons that you learned in building up your business and your journey into entrepreneurship?
You know, I think that some of the lessons I learned. Let me see here. I think everything that you want to get done is exponentially harder than you thought it would be. you know, you need to be able to work with people and lead people. It's hard to do it by yourself. It's impossible to do it by yourself, actually, because even if you're doing it by yourself, you're going to be doing sales. So you always have to work with people, and you always have to be able to interact with people. So I've learned that you really need to build a good team. You need to be a leader, and you need to be the one taking the action to move to the next step. No one's else going to do it for you, especially when you're an entrepreneur.
Nice. So let's kind of ask something a little more personal. What are some of your favorite picks in your portfolio now, as far as investing? You knew I was going to ask.
Right now, I'm really nervous about the market, and I keep saying this, and it keeps on going up. So I'm just going to keep on being wrong. I guess it's fine. But I've been mostly out. Cash is my favorite pick right now. The one that I have kept on that I'm kind of embarrassed to admit is I've held on to Tesla. Tesla is this weird. I think this is a great example of taking action as a leader, actually, because it's the only reasons why I have Tesla. For people who know me, I'm a value investor. I like to look at the data. I'm very boring. I like to come from reports. I'm not too passionate about the whole thing, but Tesla's different. Elon Musk is a little insane, to be completely honest. He's a little insane. There's a little switch in the back of his head that he turns off, and he's just going to put his blinkers on and keep on going. I know where that switch is in my head, and I turn it off sometimes, but I don't like it. It's a scary, scary road to take. It really is. But he just leaves it off, and it might even be natural. It actually just might be off. And after watching for so many years, I've realized that no one knows what he's going to do. All the analysts are wrong, and all the predictions are wrong. So I'm just going to hold it. I think since then it's doubled in value. It doesn't matter. Like, that's not even important because it could also lose 50% tomorrow. It doesn't matter. It's one of those kind of stocks. I think there's a 5-to-1 split that's about to happen. So far it's been good, but those are the reasons why I'm doing it. They're not healthy reasons why I'm making that choice.
Well, you make a good point, though, because he offers electric vehicles that are performance driven, has offered people flamethrowers, is working to develop solar panels as roofing shingles, and to date is the only private company to have taken US astronauts into space and brought them home. So you're kind of dealing with the evil genius up on the mountain in the Halloween movies when it comes to
Yeah.
kind of learning what's going on here, because none of it really looks connected at the surface. I'm sure in his mind and where he's built this business plan, there's a lot of things that are connected, but on the market, how do you go from flamethrower to electric vehicle?
Yeah. Yeah. I mean, everything he does, you can tell that it's let's just do it. Let's just do it. It's going to work. It's, what really changed my mind about all of this, I kid you not, is the crazy stories of him sleeping underneath the desks at Tesla. I don't know if you ever heard of that. Did you hear about that story?
Yeah.
He'll sleep for like 5 hours and then like wake up and keep on going. Like that's insane. That's insane in my mind. I can understand why it's effective. It changes people's culture around you by doing those kind of actions. His tweets, he'll support what's his name? Oh, Kanye West for president. That's not because he supports Kanye West for president. It's because we're talking about it right now. Like that's why he made that tweet. It's not because he cares politically about any of that, but he's doing all these things that are out of the social norm to get attention, to change cultures, and to drive the businesses. So that was a lot to talk about for one stock.
So let's dig into that a little bit. Do you believe that divisiveness or a strong stance on something, do you feel that hurts the value of Tesla as a company, or could it hurt any other business as far as their value also?
And what do you mean by that? Like,
So let's say, for example, something as controversial as taking a stance on the presidential election by supporting Kanye West. Do you believe a stance like that ultimately hurts the value of Tesla?
it could hurt other companies, but Elon Musk, Trump, all these people, when they start, when they're just doing it for attention, that doesn't affect it. I think when he said something on Twitter, like the SEC got involved again, it wasn't
Yeah.
even the first time. I didn't realize it was like the third time that they got involved. All of this is because, they're pushing the seams of what people are doing to try to control what they're doing. The control of society. He's just brushing off the SEC and saying, fine, find me, but I'm going to say what I want to say. I got all this attention and someone's thinking about Tesla again. It's all just part of continuing to have everyone know about it. Other CEOs can't get away with that. They're not, Ford CEO, who I don't know who they are, isn't always talking about random stuff and getting my attention to make me think about Fords. That's not what their business is, So that's my belief. This is all my opinion at this point, but that's what I believe is going on there, and why I think it's fine for him to say whatever he wants, because it doesn't matter. People are going to keep on buying Teslas because he's doing that intentionally.
But to clarify, probably not a stance for the average small business owner to take who's just trying to get off the ground.
Yeah, I do believe the bad, any publicity is good publicity, or whatever that term is. I think that kind of does have merits. So I think you need to take that into your own consideration for whatever business you're doing. If you're doing a controversial business, like marijuana, THC oil, I guess, you make a controversial statement, you might get more. I don't know. Like, it may not be the right move for you. It might be the perfect move for you. You're essentially trying to influence social media for your own benefit. I won't lie to you. I've done this before. I've tried it. I went on Twitter, on our Stockteamup account, and I've just said random things and seen how people respond. I've noticed that the more controversial I say things, I think that you need to make that decision for your own business. I think if you're a banker, or you're selling insurance, or you're doing something that you need the trust of people, I wouldn't recommend trying to influence social media that way. But if your product is a little bit more on the fringes, or maybe a little bit more innovative and out there, maybe it's okay. Maybe try to say something controversial and see if people will go to your business. That advice is not good, so don't. Maybe you shouldn't do that. I'm hearing myself say all this, and I'm like, maybe I shouldn't. But yeah, maybe you should. I don't know.
Maybe the clock's not run out for you to run in this election.
I'm sorry, what?
Maybe the clock's not out for you to run in this election.
Yeah, I can just, I've thought about it. I was like, maybe I should start saying some controversial stuff and see what happens. And I did a little bit. I said some controversial. I said some hardline ideas on certain stock picks, and it got drastically more impressions. That kind of stuff isn't fueled by people. Well, it's fueled by people, but it's also fueled by these social media platforms algorithms. They're fueling that kind of stuff. That kind of stuff that's going to make you look again and read it again. That gets pushed more on social media. And if you don't care and you just want to get more eyeballs for your product, it's your choice. Go for it.
Very good. Well, let's see here. What haven't we covered yet today? I feel like there's always this, world of things that you and I decide we're going to talk about every time we talk, and then here we are, and we're going to formally talk about it, and then it's like there's a
I took a moment and I chilled for a moment. I might edit this out. Maybe I won't. But I watched the Joe Rogan Experience sometimes. One of my analysts, when I was a hedge fund manager, would show me it, and it's interesting. But they're just kind of chill. They're just talking about stuff, and they're just interested in stuff. So, maybe it's best if we just talk about stuff, and maybe we'll just naturally get to interesting things. We can always edit stuff out.
That's true. Although from a production perspective, editing content out of a video triples or quadruples your total production time to get it going. So if you say from the get-go, all right, from the moment we start the broadcast to the moment we end the broadcast, your ums, ahs, and WTFs are now part of the finished product, and we have to embrace them. The Japanese, when they break a vase, they take gold and they put it back together, and now those imperfections are highlighted and they're part of it now. It makes it unique. And from a perspective of production, it kind of does the same thing, because we're all human beings. We all miss words, we mispronounce things, we could have divisive opinions, but it's just part of the experience.
Yeah, exactly. So, yeah, I'm fine with it. We can talk about, other. One thing I was going to talk about, actually, and I'll say a full disclosure: I am not a lawyer. I am not giving any lawyer advice. I am not giving financial advice of any means. But I wanted to touch on it because I think it might be important for people that want to get to the next level. You're doing an actual funding round. It's not difficult, but there's hoops to go through. The SEC regulates all. You're offering a security when you try to sell part of your company to raise money, and the SEC gives exemptions for filing, but you need to know what those exemptions are, and you're allowed to, for friends and family round, people as long as you're not soliciting people. So if I start talking, if someone started talking in the video about how you should buy their small company, that's bad. Don't do that. But you can talk to your friends about it. You can talk to your family about it, people that you're aware of and know about, and they know you on a personal level, and they can fund your round, and you can do an exemption with SEC. It's like remember these numbers, look them up on Google. 504 Reg D, 506 Reg D. These are exemptions in the securities laws that you can use, and then you can have a certain number of unaccredited investors. These are people that have less than $2 million in assets that can invest, so long as they have healthy financials, which is it's a little murky, but that's kind of the hurdle you have to take if you think you're ready to do a round for your company, but you just want to do friends or family.
Now, before you start asking for investment into your company from anyone, friends, family, business partners, people you've never met before, it's imperative that you understand what you're going to do with the money. Because I see a lot of small business owners that say, I'd love to get money in my business to keep, doing what I'm doing or expand what I'm doing. And to be able to ask for that money, you have to know exactly how you're going to spend it, because
Yeah.
that's an important list of answers you're going to have to give before someone pulls out their checkbook and says, yeah, I'm in.
Yeah. A business plan is very important for that. You know, you're using that money for costs, and those costs need to translate into revenue. Uh, you know, looking into something called a return on investment, ROI. How do you do that calculation? It's a very basic calculation, but it's what investors are going to do. And when you have, so I think it's important. You should know what an ROI is, return on investment calculation is. So think about if I'm insured 5% from bonds, right? Why would I give you $100,000 when I'm only going to get back, $104,000? I can make $105,000 on bonds. It's a very basic concept, but then you take that to more complicated businesses, and it's still, once you refine all the numbers, the same basic calculation. An investor is going to give you X amount of money, and they want a return. And as the more risk your business is, the more return they want to make it worthwhile. And you need to show that. You need to show how, as your cost and your spend reduces your capital, your revenue is going to start going up, and your investor is going to be able to get out of that company with a return or start getting paid dividends from the company as a return.
So you bring up an interesting, just an interesting concept of that no matter how complex or large the business, it always comes down to how much does it cost you to do business versus how much can you make off of doing business, and that every business is essentially the same. So let's talk about a classic story that just about every Hoosier knows about here, and that's Marsh Supermarkets.
Okay.
Marsh Supermarkets was a prominent grocery store chain here in central Indiana, and then they got bought out by Sun Capital. So from your experience of understanding what it's like to calculate cost versus profit, return on investment, and things like that, where do you think they really put their foot in their mouth as far as Marsh?
I have to be careful here. I don't know the full story about Marsh. I've been here 3 years, and I just noticed all the marshes are closed down. That's all I know. Maybe they did. I don't know what the details of that strategy was. There is a possibility that there was a strategy that they wanted to close the marshes down intentionally. They just wanted to get rid of the competition. I doubt that's what happened, though. Is that what happened?
Not that I'm aware of, although a number of buildings that Marsh occupied had at one point, I believe, drawn interest from Kroger just to purchase the building to prevent another grocery store from opening up. But I don't believe that any competitors had a hand in the takeover of Marsh and then its ultimate demise. But over the years, you just heard customers saying the prices continue to increase. Service continues to decrease. Oh no, they're closing the store closest to me. And then one day it was like the golden moment on the news, because Indiana's law about selling alcohol is tied to having a pharmacy or a special packaged liquor license. But because as a grocery store, they had a pharmacy inside that allowed them here in the state of Indiana to sell alcohol. So one day Marsh sold all of their control in their pharmacies to CVS Pharmacy, which then I believe got around that same time they got into Target. But it meant that they had so many days under Indiana law to liquidate all of their alcohol. And I'll never forget all the friends on my timeline going, oh my God, you got to get to Marsh now because they have your favorite bottled spirit or wine of choice at like 40% off. So things like that, it feels like they took something that was ultimately at the beginning a simple problem of just trying to understand who your customers are and what they want. And over the course of a decade, bad decision after bad decision led to the demise of a brand that many Hoosiers had an emotional attachment to.
Absolutely.
And, that happens with a lot of great brands over time. We hear from time to time about a large iconic business being purchased about something else. And yes, there are some mergers and takeovers that go well, but more times than not, it ends up hurting or even destroying the brand. And I want to know what, from your perspective on it, what can those entities that are out there to purchase businesses do to help prevent that from happening in the future?
Phew, I've seen hedge funds and private equity at work, and it's usually quite efficient. I'll tell you, I don't know anything about Marsh, so I'll give you some. I like my opinion because it's really unbiased. It's just kind of, this is what I see. With Marsh, there's two ways that could have went. You kind of said that they spun out the pharmacy. They sold the pharmacy, right? You said that. So, you know, there could be a kind of unfortunate reality that that private equity firm was really a vulture company all along. Like they were planning on selling the assets off and just letting the whole thing die, and that it was so cheap to do that, it was worthwhile to just buy these assets cheap and then, sell it off. I'll give an example, like someone who buys a really dirt cheap car that's broken down and he just breaks it up and sells engine parts, and he makes money that way because he's just going to sell off parts of the car. That could have been their strategy all along. It probably wasn't. It sounds like they might have just made mistakes on the way, but that's a real strategy. And there's nothing wrong with that. You sometimes have the vulture of some old companies that just, they might be great brands, but it's better economically for them to just go away. However, I doubt that's the case for this.
Well, and so to talk about the same concept on a larger scale, Sears Holdings, which owns the iconic Sears retail store and what's left of Kmart stores,
Yeah.
at one time or another, both companies were really, really strong American brands and had high loyalty from consumers. And then over time, just their failure to innovate put them in a position where they end up merging together, because what's better than merging two failing companies and expecting it to work? But I feel like a lot of this comes down at the end of the day that big businesses and making decisions strictly from the perspective of how much profit you can squeeze out of it is destroying iconic brands that in the long term could really bring more value to you. If you sit on the asset for 30 years and nurture it and adapt it and grow it to keep up with consumer demand, you're going to make far more money throughout your career than if you come in to sell the fixtures and the buildings and then cash out and go somewhere else. To me, it doesn't make sense as a short-term strategy versus a long-term. You're a lot more iconic and you're going to make a lot more money at a slower pace, but by continuing to make sure that your customers feel that emotional attachment to the product, that they feel like they're getting good value for their money. And I feel like, Marsh here in Indiana and then Sears and Kmart at the national level just completely kind of missed that.
Yeah. I don't know much about Marsh, but interesting enough, I spoke to a really great was in the financial world. I don't know if she's an investment advisor now. Her name was Courtney Richardson of the Ivy Investor. And in one of our sections, we talked about Sears and how she loves Sears, but she also said that sadly enough, she believes that they were really burdened by their pension plan. Their legacy pension plan was really keep them from growing and getting to the next level. So they weren't able to really compete as well as Walmart and Target, and ultimately that was why they weren't doing so well. I don't know if that's 100% the reason why, but it seemed like that might have been a part of the story, which is they just didn't have the money to really innovate and compete.
I honestly think, though, that that's a conscious decision to fail to innovate, because small business owners innovate every day with little to no capital in their business. And, the old saying goes, when there's a will, there's a way. Yes, that company had a huge liability with their pensions, but starting in the 1980s, they were a large enough company still that they should have been able to see that the winds were starting to change. Let's say, okay, 1880, when Sears started, it was a catalog. You get a catalog in the mail, and if you could stuff an envelope with money and kind of scribble out what you wanted, they'd fill the order as long as they could get the goods to that address. As long as you give them an address to deliver to, they'll send it to you. And it allowed Americans for the first time to participate in retail that they previously hadn't. Then again, after World War II, Sears was a huge pioneer in the mall and suburban shopping. They built stores that weren't the tall buildings in the big city. They were building things that were sprawling on cheap land that you came to and it was a destination. Then as malls continued to evolve, it was a food court, it was other retailers. You can't tell me that, somewhere in the 1980s, which is where a lot of their innovations stopped, that someone in the company didn't sound off the alarm and say, hey guys, our customers just aren't interested anymore. What do we do?
Yeah. This comes down to, again, full circle back to Tesla. Really, leadership is, the Dilbert jokes about kind of a CEO just being like, some random robot, or, I think the joke is either a robot or maybe a lizard man, or, just some, entity, or maybe it's like a Star Wars illusion, just the projector of, that's one joke I remember from Dilbert. And they're just going to say the same thing over and over again. But behind the scenes, a CEO and leadership up there make a huge impact on companies. I will keep that. I've changed my whole thought on that. I thought that companies kind of just did their thing, and leadership, was kind of there. But that is absolutely untrue. Leadership at the top level really will impact the leaders below that person, and then how people that work in the company are they self leaders, are they going to be go-getters themselves? It really is impactful, and it's shocking what small changes you can do, and I've seen this happen, that affect a company dramatically. One big problem is inner fighting. If you want to go back to the partners, if you're fighting with your partner, man, you're gonna have fighting with everyone that works underneath you. It's just part of it. They're all gonna start fighting because that's the culture that you built. But if you really set a culture of you need to hit your goals, you need to be innovative, people will follow that culture if you're a strong enough leader. So yeah, I mean, there was probably some leader at Sears at one point that just dropped the ball and was out golfing a little too much.
So you've mentioned Elon Musk as one of your favorites to pay attention to. Who are some other big business leaders that just really intrigue you and interest you?
Man, I'll go from experience. Um, man, the first CEO that I ever worked underneath, I wasn't working directly underneath him, but I was, in the company. He was the CEO, and I was with corporate, so I would interact with him. Uh, Man, he's retired now. He owns a golf course and just retired. But I like uh, the people that worked for him, like they were my bosses, and they would talk about him, and he had this ability to scan a person and know with a few minutes talking to them, what their capabilities were, what they could do, how they could fit in the company, if they can't fit in the company, if they're lying or not, very quickly from reading the person. And I believe that's very true because I went through a bunch of courses to figure all that out. There's really a lot to be said about reading a person's, how they're physically acting and talking. Are they looking up a lot when they're talking to you, which means that they're guessing on what they're telling you? Are they telling you up front that they don't know what they're talking about? That's a good sign, because if they know what they don't know, that then they have a better chance of knowing what they do know and actually, changing the reality around them. Um, and most of all, he set an expectation and he expected you to meet it, and there will be consequences if you don't meet it, and there'll be, reward if you do meet it. And so you knew where you stood and you knew what you need to achieve. And I think that's very important in leadership, to be, concise on what you expect, um, and make sure that you follow through with what will happen either way. It's very important. In terms of corporate people, um, I'm not sure. I used to always follow the Google guys, Larry Page and Sergey Brin. They were very interesting leaders. They were very technology based, so they were a little off from the normal leaders, and it was fun to kind of listen to their struggles over time. But they're gone. They're done. They're pretty much off doing tech stuff all the time. The new Microsoft leader is very interesting. He's completely changed the culture of Microsoft. They went from closed off, no open source to they're wanting to embrace open source, but they're not an open source company, but they're trying to embrace it. The purchase of GitHub was a very, very interesting purchase. GitHub is a bunch of open source, bunch of code repositories, some open source, some not. Random example, Bitcoin's code repository is on GitHub. Uh, Lots of code bases are on GitHub. So they bought that, and they bought a company that had, I believe, zero revenue. Zero. I mean, no revenue. And I think that was a good choice, believe it or not.
Well, and it brings up something else that with that leadership change in Microsoft, they made a shift from having to purchase a CD-ROM and a box as a program for full sticker price to subscribing for a small chunk every month to have the latest. And that brings up my point earlier about how if you provide a good product or service over time, you're going to make way more money. And I mean, personally, as a small business owner and kind of a geek in my own time, I can certainly appreciate how not having that high entry point of purchasing the software barring me from pursuing it. Let's Office 365. You can subscribe to it. You can pay a manageable amount every month. Yes, you're going to pay more than the sticker price of the software, but the positive trade-off is that every time Microsoft has updates for that product, you're going to get it. So I'm excited to see how that model has grown over the last half decade. And I personally, fingers crossed, am hoping that they're going the same direction with Windows, because there's no reason to retire a computer just because the operating system is no longer supported. If the hardware's still good, it should be able to run the newest version of Windows. And yeah, there's different innovations that force obsolescence earlier on some products than others. But it's incredibly wasteful how our culture works about you own the computer 5 years and then you throw it away or put it in a closet or anything else just because it's Windows 7 and now you have to have a Windows 10 PC. So why couldn't you completely subscribe to Microsoft and then always be able to use any device as long as you physically can?
Well, so I find it interesting to see how Microsoft is trying to change themselves. They talk only about apps now. There's no software, there's no programs, it's all apps, and they are indirectly competing with phones. They're competing with phones and tablets in this weird way. And I think that they're trying to innovate quickly, and so they're having a hard time trying to keep legacy stuff going when they're really trying to move into that kind of stuff more. So I'm sure I'm not sure, I'm guessing at their company that the reason why they're not doing that with Windows is because they're really trying to push their operating systems onto more devices that they've missed out on. It really should be like Apple and Microsoft as the phone operating systems, but it's Apple and Google. Google snuck their way in, and now they've been trying to catch up ever since.
Well, that brings up when it's the time to innovate is every day.
Yeah.
If you sleep for a moment, you're going to lose out. And it's like the new Coke debacle in the 1980s. New Coke came out. Up until that point, Coca-Cola was the end-all, be-all market share leader in soft drinks. They introduced New Coke. Their customers hated it, and then they lost the king of sodas to Pepsi temporarily. And, yes, it was an innovation, but it was one that they probably didn't listen to enough of their customers before they did it. They didn't go out and ask, hey, what's wrong with Coca-Cola? How can we make our product better? And they to find out it was probably just the perception that they gave about their product in advertising, not that the product itself was no good.
Yeah.
So it brings up an important point that you can't disconnect from your end user of any product or service, because the moment you do, you might as well just start selling everything off while it's worth something.
Yeah. One thing I'll note for all the tech people that might be watching right now, using Google Analytics or Facebook Analytics to see how people are using your site has been very eye-opening to me in the last, we've been using it for like 6 months now. But seeing how people act is very interesting. Following them, how they go from page to page on the site, how long they're staying on different sites, how they're interacting is very important. And I say that because in any business, you have to be careful of what the customer tells you versus what the customer also wants. And you have to really just figure both those out at the same time, and be cognizant that you're not, they might say they want this, but what are they really doing? What are they actually wanting? So just, that's a hard thing to measure too, but it's the very, the very great part of business is you're always trying to figure out your customers. Right here then, thank you so much, Ryan, for talking to me. I hope I helped your small businesses with some questions they might have, and I hope we can talk again soon. Thank you.